Yeah, so as we show on this slide here, if you look at high performance compute and digital enterprise, it makes up roughly 40% of the fund today. Beyond that, the other big areas of structural growth that we continue to like is mainly around healthcare, where we are invested in GLP-1 drug providers like Novo Nordisk and Eli Lilly. And then we also have some other ideas in that area that we think, can benefit not just from AI, but from the advances in healthcare generally. Healthcare has obviously been a great area to invest for a long period of time, and it still remains a prominent part of this fund. Elsewhere, we definitely look at areas like consumer. We often find great consumer companies that are structurally growing with proven concepts that they can roll out across the world. Good examples here would be a company like Lululemon, which is obviously dominant in women's wear and dominant in the US and countries like Australia, but it's not very big in China. It's not very big in emerging markets. It's even not very big in Europe. And so assuming people in China and Europe like Lululemon as much as the US and Australia, then there's still a long runway for growth in front of it. At the same time, assuming men like Lululemon products as much as women, then there's a long runway for growth in front of it as well. So there's a company that's not trading at a very high multiple that we see strong runway of earnings growth in front of it, which ultimately earnings growth equals share price growth. So that's some of the consumer ideas. And then the last thing we just flag is just climate. We do believe that decarbonisation is a great opportunity to invest. From that point of view, we do think that companies around the world are not giving up on their net zero targets. And here we're very much focused around energy efficiency companies that can help lower the carbon footprint for corporates, whether it's an insulation company or an electrical equipment company. And there we have a number of ideas in the fund also. And so the simple idea here when we show this slide and we show the fund is to identify the areas of structural growth and then identify the winners from that structural growth. If we're right about the structural growth, that should equal structural earnings growth for the companies that get it. And that earnings growth of more than double-digit growth should equal more than double-digit share price growth over time. And that's your sort of path to double-digit returns. The reason why we split it up into these different areas of interest is really just to diversify the fund. We don't want any one area like AI, say AI didn't happen, to decouple the entire performance of the fund. We're looking for different idiosyncratic growth drivers from different idiosyncratic areas that will give us the diversification we're looking for to give us your path to double-digit returns of the product over a long period of time. Yeah, so obviously it's been a strong last 12 months of performance after that strong adjustment that I showed you previously. We do think this is probably year one in what we think is going to be a bull market that probably lasts 3 to 5 years. And so it's good to have recovered the losses of 22 and 23 and then obviously be back above our highest point. From here, I understand that people feel like they've missed it or they feel like it might be too late. We don't think that's the case. Yes, equity markets will get ahead of themselves from here. And yes, they could pull back short term. But macroeconomics wise, we're set up for a period of stability, particularly around interest rates, as I said, and probably economic growth. And secondly, we're actually just at the start of these big changes that are occurring. And our job is to identify these areas of structural growth, AI is a big one, and identify the winners. Yes, we've talked about NVIDIA today, but I'm sure there'll be other ones coming along that we will look at. In the same way, the same thing happened in the mobile cycle and the same thing happened in the PC cycle before that. Beyond that, it's important to stress that there will be other great structural growth trends that pick up from here. The fund is also invested in things like climate and decarbonisation. It's also invested in healthcare, where we see lots of areas for structural growth. And so from our point of view, yes, performance has been good in the last year. Nice to recover the performance from the year before. But we think we're set up for a strong period of structural earnings growth. And that structural earnings growth, if we can find it, will equal structural share price growth. That is ultimately your path to getting double-digit returns, and that's what we're hopeful of looking forward also.